All right, so here's what we got today. Tesla announced their quarter 4 results. So here's my quick and dirty take. First is energy. Energy, they did not deliver as much as they wanted, as I expect them to deliver, I should say, not what I wanted, but what they wanted. So yeah, that's the big one. 322 megawatts hours was not delivered from what I predicted. I thought it might increase a little bit. However, the new facility in California, the mega factory, is supposed to be somewhere around over 20 megawatt hours of production with the lithium phosphate batteries, lithium ion phosphate batteries. That should increase dramatically. I would say you'll start seeing this go up. I would say probably in quarter 3 to quarter 4, you'll start seeing a massive increase starting there with 2023 being the year of the mega pack. I think that's what's going to happen. You're going to see a massive increase in battery storage. And that's their first factory. I'm pretty sure they'll be building a lot more of those factories in the near term. All the revenue was actually a little shock to me. I didn't expect that much. I didn't expect them to hit almost 16 billion. A lot of it came down to was increase in costs. I mean, increase in pricing for their cars. That was a big one. They got that over $50,000 per car. They have, as you see, in quarter 4 2020, they hit 49. They now bump that up to 50 now. So I think that's going to be probably the going rate going forward. I think they'll be hitting around 50,000 each quarter going forward, which is going to improve their gross profit quite a bit now. Credits, not a big deal. Wasn't expecting too much difference on that regard. The good thing was they actually hit their they actually increased quite a bit of other revenue, over $1 billion in service and other revenues, which is a good thing. This one I was kind of depressed about a little bit. They didn't hit 30%. Now you have to understand this number here takes out their credits. So I don't count credits when I look at cost per car. So that's, yeah, it's there. It's just, it's annoying for me. I don't like it, but it is what it is. But yeah, they didn't hit 30%. I thought they would finally hit 30% without credits, but didn't happen. Not a big deal, but it just means it's going to take a slower rate for them to get up to 30%. I think that was a big deal right now. I don't know if it's going to end up happening in the future, but yeah. Gross profit, obviously, I missed my mark on that one. $287 million. Not a big deal. I don't consider it a huge miss on that regard. They still did pretty good. The main thing that drove it was their revenue per car. That's the number that I was really impressed with. They actually hit that number pretty good. The other thing that was really cool to see was they actually made money on service. $16 million they made money. Now for the year they're still short $100 million in other revenue, but hey, I'll take it. It's not a big deal. I like that number. The next one is going to be gross profit. On R&D. Pretty impressive, $740 million. Way more than I expected. I think that's a lot is topic I didn't talk about in the future, but at the end here. But yeah, that's a big one. Operating expenses, SG&A. That was not a shocker to me. I was expecting a little less. You have to understand is I was expecting them to be able to write off some of their costs for Elon's tax sale on the SG&A line, but it doesn't look like it happened. So it is what it is. But yeah, that was $260 $71 million miss I missed on that one. But hey, I was better than almost everybody else. I don't think anybody expected that high for SG&A. But as I said, I had $320 million Social Security expense on that one, or yeah, not Social Security, Medicare expense for Elon's stock purchases. So overall, operating income ended up being 2.6 billion. Yeah, I was off by 673, but I think that was mainly to do with an increase in R&D and an increase um, in that SG&A line. I was really surprised about that. I didn't think it would be that much, but then again, I was expecting $100 million off that for just the purchase of the stocks. As for interest expense, nothing major there. Yeah, I was off by a little bit, but not a big deal. Income before taxes. Provisions for income taxes, not a big deal there. I'm not too worried about that. Ended up keeping it roughly in line. Share income and net income costs for subsidiaries. That actually went down. I was a little surprised about that. It's been going up, so I was okay. Depreciation went up a little bit more than I expected. I think that's mainly because they're starting to be able to write off some of their Tesla, Austin, and Berlin costs now. Since they're actually producing vehicles, they can actually start writing some of that off, which is good. Stock-based compensation, I thought it was going to be higher, honestly. That was my real big miss here. I thought it was going to be a little higher because I thought they would be able to write off some of Elon's purchases part of it, but I guess it didn't happen, or I don't know. You just say, yeah, it's there. In the end, that puts EBITDA at 4 billion, 11.6 for the year. So pretty good numbers there. I like that number. Net income still pretty good, and earnings per share is 250. Yeah, not the number I was expecting. I was expecting almost $3, but I'll take 250. That's not a bad number. And then interestingly, I added on to here was the number of shares. I was expecting them to increase shares by 27 million, given that Elon's was about 24 million shares. So I was thinking they might have like 3 million coming out for other compensation, that sort of stuff. That was other shareholders and stuff, but I guess it didn't happen. So I don't know why it was only 12, but that's the number they gave out. So yeah, that's what we got here. And then, so let's talk about that. A little surprised about the R&D expense. In the call, I'm just going to gross over it real quick here. The Cybertruck is not going to be in production in 2022. As far as I'm concerned, they're not ready for it. They have a lot of issues going on with it. I would not expect it. Elon's hoping to get 250 per year out of that vehicle initially. That's going to be the run rate, but they have to get the vehicle cost down first. And I think that's the big thing. That's the reason why we're seeing different models being tested at Austin and at Fremont. They're really trying to figure out how to get their costs down. They have to get their costs down. The other issue they have is their technology issues with the vehicle. It has a lot of technology in it that they have to deal with. As part of that, as many of you know, they went from a single, dual, and tri-motor to just a dual and quad motor. That's going to help out with the framing, and the other aspect is if they do a dual motor, that means that they could probably have a motor in the front, motor in the rear, and be done. So that way you have four-wheel drive for every separate truck, which is what people want anyways. I think they were noticing that nobody wanted single motors because people want four-wheel drive. Where you purchase pickup trucks in the Midwest, which has some white stuff that comes down that causes road issues, driving issues. I'm not sure if you heard of it. It might be called snow. So most people want to have the ability to have four-wheel drive to get through the snow. They like having more power on the wheels to the surface. Simple as that. As for the other aspects of the vehicle, they're just trying to cut down as many costs. If you can get rid of a part, that saves you money, and that's what they're trying to do. At this stage, I think that's what they're trying to do. They're looking at every single part, like they're having people look into it. They're showing it off to the other people so they can see the vehicle and say, "Hey, listen, why are you doing this way?" They're looking for other eyes on the vehicle because engineers will look at the vehicle and look at it, and they won't figure out what the issue is. So I think that's what it's really coming down to. So yeah, that's the big thing I see coming out. The rest of the call was pretty simple, nothing major. I'm glad they didn't talk about stock splits. For those that don't know, when Tesla went public, in their incorporation documents, they had a $2 billion or 2 billion share cap as part of their incorporation papers. Right now, as you can tell, they have 1.150 billion shares, or 1.35, somewhere around that. They're over 1 billion shares. They cannot split stock unless they do a 3-4-2 split, which basically is a 1.5 split. That's the most they can do at this stage. So yeah, I don't see that happening anytime soon. The 3-2 split would be pointless. It's not going to impact. I mean, it won't help out what people need, which is a 5-1 split or a 10-1 split. And right now, Tesla's not in that. Tesla would need to have shareholder vote, and when you have 40% of the shareholders being institutions, and Elon and the other insiders over 20% or around 20% of the share, that's 60% of the vote. Even if every not even if every private investor wanted to, or if they wanted a stock split, if those two groups don't want it, it doesn't pass. They need to up the share count, and they need to up it to at least, I would say, at least 20 billion. I think they'd be better off moving it to 50 billion, given the value that the company is looking into. The other part of the talk was a lot about Optimus, the robot. That was quite a bit of the talk on there. I think they're looking at the aspect of labor costs is getting really high. They're trying to figure out how to keep their 30% gross margins. So I think that's the big one that they're trying to get down to. So I can see that definitely being a aspect they're looking at. So yeah, we're going to definitely see some changes going forward there. Outside of that, not much to say. The talk was the usual Elon talk. He didn't give any update on the Model Q or $25,000 vehicle. Model Q's from My Tesla Weekend, Brian. So yeah, that vehicle, they're just not going to go with it right now. I think their issue is they just don't have the batteries, they don't have the chips. So yeah, that's the big one, right, for them right now. They don't have the batteries or chips. So yeah, that's going to be a big problem going forward. If they can get the battery issue, should get resolved with Austin, and Berlin will have their own battery supply there. It's going to be coming down to is getting the chips, and that's with it's going to be when NVIDIA walks away from Samsung next, when they start producing the 40 series. But that's a different story. I'm not going to go much further into that, but that's going to be the big one for Tesla. They go with Samsung for their chips, for their that they put in every vehicle, so they have to make sure Samsung's ready, or Samsung can provide that chips in. Samsung has a huge amount, and I'll go into that further. Um, among other companies that Tesla probably buys chips from. They're probably buying chips from everybody. So yeah, there's that. The other items I really looked at it, I didn't see much else in the thing that really made it interesting. Although I will say they did reduce down their debt. Year over year, they're down about 40% of their debt liabilities. They're about 5.4 um, billion dollars in liabilities right now. So they're looking pretty good. Cash flow is still pretty good. Um, they're gonna start hoarding cash pretty fast, but they're spending cash. I mean, as I said, they upped their R&D. That was pretty impressive. I was not expecting that amount of R&D. So yeah, that's about it. If you have any questions, comments, put them in down below in the comments. I will read them. Trust me on it. I do read my comments, which, by the way, it's been pretty easy. There's been no comments, so I don't mind. Um, if you guys have any questions, any concerns. Um, oh, as for, let me put one thing on here. The street was off as usual, although they did expect a higher operating income. So that's going to be a drag on Tesla. I think that's going to be the big one. But if they take out the cost for Elon's Medicare taxes, that will put them in line. I think they just forgot about it. I can't imagine them not thinking that Elon had a huge tax burden onto Tesla. So there's that. Otherwise, everything else was pretty good. Yeah, they didn't hit the 30% line, but that's what Street was expecting. Trying to think if there's anything else off the top of my head here. No, not really. That was about it. Um, as I said, if you have any questions, concerns, let me know in the comments below.